Greetings my YouTube family, thank you so much for visiting this channel and happy new year. So on this channel we talk about personal finance and investing, and in particular today I'm going to talk about the first home savings account, particularly for those who reside in Canada. In most developed countries such as Canada, research shows that most millennials are struggling to buy houses because the house prices have been increasing across the country. For example, in Canada, an average house cost $656,625 as of October 2023, and this cost is projected to increase. Even though 2/3 of Canadians own house, it's a challenge for those millennials because a home ownership can be a great source of building wealth, because over time in Canada and in most other countries, house prices have been increasing over time. So what that means is that when or if you then decide to sell a house at a particular time, you might actually have capital gains. In other words, it might have appreciated, and then the difference of that selling price and the price that you may have bought the house minus other costs like the mortgage might actually yield some income. So in Canada, what I've learned is that there are usually 5-year terms which can be variable or fixed year mortgages. So people who can't afford to buy the house in cash, which is the majority, they go to a bank or financial institution and get a loan. But in most cases, they have to have a deposit which can be 20% or whatever amount, but preferably if you have 20%, it means that your insurance cost might be lower, and also even the monthly mortgage payments might be lower compared to someone who has maybe 5% down payment. So what the government of Canada did in 2022, they proposed what is termed the tax-free first home savings account, so that the first buyer's account starting on 1st of April in 2023, they could open a registered plan that would give these prospective home buyers the ability to save up to $40,000 over the lifetime of that plan. And this is prorated every year. Every year, the maximum contribution being $8,000. So if a family, the spouse can raise $8,000, can contribute $8,000, and the other can contribute $8,000 towards the FHSA, as it is commonly known, then it's also tax deductible as long as they are at least 18 years and less than or younger than 71 years. So the advantage of owning a house through this scheme is that it is tax deductible, just like what is known as the RRSP, Registered Retirement Savings Plan. What it means is that if you contribute $8,000, that $8,000 could potentially reduce your tax for that year, because in Canada the tax regime is a progressive tax regime. In other words, as your income increases, your tax rate increases. So if you max out, let's say, the $8,000 through this account, it can potentially put you in the lower tax bracket in that particular time. But just like the RRSP, what it does, what happens is that if you then withdraw that account, that money from that account, then the tax might be actually higher before let's say 70 years or before you try to or you buy the house. So it's very, very important to be sure that this money is specifically devoted towards home ownership. Otherwise there might be other costs that come with it. But in conclusion, it is very important to consult your tax advisor, and I find the Canada Revenue Agent's website to be very helpful. And also this information, it can change from time to time, so it's also very important to do your due diligence. But I thought I would just share this information with you, my viewers, and thank you so much for your time. And I'm going to do other videos about other registered accounts. And what I've also noticed is that in other countries there may be similar accounts, for example in the United States, right? But they are just different in the names. So to be able to cushion themselves or to optimize taxes, it might be a good idea to understand the tax rate or to tax advisor. So I thought I would just talk, not as a tax advisor, but just share what I know about this information that is on the Canada Revenue Agency. So thank you so much for visiting this channel, and I hope to continue sharing my insights. Thank you, and don't forget